All right, so today we're going to deep dive into something that I think a lot of people find super exciting, but also maybe a little intimidating.
Yeah.
And that is financing your first home.
Big step.
Yeah,
Yeah.
for sure. A big step.
Huge.
And, we're going to try to break it down, make it a little less scary.
Absolutely.
And we found a really great YouTube video
Oh, yeah.
from a channel called Riqueza Vital. Have you heard of this channel?
I have. Yeah, they have some really good stuff.
Yeah, I've been checking out some of their other videos, and it's all really interesting.
Really solid advice.
Yeah, and this particular video is titled Cómo financiar tu casa rápidamente y con éxito, which basically translates to how to finance your home quickly and successfully.
Nice.
So it's in Spanish.
See?
But don't worry, we've got you covered.
We got you.
We watched it, we took notes, and we're going to break it down for you.
Absolutely.
So one of the things that really stood out to me right off the bat is how much the video emphasizes the importance of understanding the process, like
Right.
really understanding it.
Yeah. I mean, it can be easy to get caught up in the excitement of, looking at houses.
Yeah.
But having a solid financial plan in place before you even start
Right.
is going to make everything so much smoother down the line.
Yeah, it's like
Less stressful.
trying to bake a cake without a recipe.
Exactly.
You're just kind of throwing stuff together and hoping for the best.
Yeah. You might end up with a mess.
A big mess.
A big mess. Yeah.
So where do we even begin with this financial plan? Like, what are the first steps?
Well, they talk a lot about the importance of saving for a down payment.
Okay.
And that makes sense,
Yeah.
right? Because that's like the foundation
Yeah.
of your, homeownership journey. Foundation.
Got it.
And I love that they even gave this tip about setting up like automatic transfers to a high yield savings account.
Oh, that's smart.
Yeah, just specifically for your down payment.
I like that.
So you don't even have to think about it.
Automation is great.
It is. It's like having a little financial robot working for you
I love that.
behind the scenes.
Yeah, like just tucking away a little bit of money here and there.
Exactly.
Okay, so down payment, that makes sense.
Yeah.
But then there's this whole other thing, the different types of mortgages
Oh, yeah.
out there.
So many options.
How do you even know, like, where to begin?
Right. Well, the video does a nice job of kind of breaking down
Okay.
two of the main types.
Okay.
Fixed rate and variable rate mortgages.
Okay. Those are the big ones that I always hear about.
Yeah. And for good reason. So fixed rate, your interest rate stays the same for the entire loan term.
Okay.
So it's predictable.
So that's good for peace of mind, I guess.
Yeah, exactly. You know exactly what your payment's going to be.
For like the next 15, 30 years or whatever.
Exactly.
Yeah.
So it's like that reliable friend who's always there for you no matter what.
Okay, reliable friend, fixed rate,
Exactly.
and then variable.
Variable is a little more
Unpredictable.
adventurous.
Okay.
You might start with a lower interest rate,
Okay, that sounds good.
but it can fluctuate
Uh-oh.
over time based on market conditions.
So it could go up.
It could go up.
So you could end up paying more.
You could end up paying more, yeah.
Yeah, so it's like that friend who's fun to hang out with, but you never know what's going to happen.
Exactly. You got to be prepared for a little bit of a roller coaster.
Okay, I'm getting a good feel for these mortgage personalities now.
Good.
I like it.
Good.
Okay, so, but even before we get into like choosing between those different types,
Right.
we got to know if we can even qualify for a mortgage in the first place.
Oh, yeah. That's a big one.
Right.
And the video goes into that whole process of qualifying.
Yeah.
And it can seem kind of mysterious.
Yeah, very like behind closed doors,
Exactly.
Like how do they decide
Right.
who gets a mortgage and who doesn't?
Well, the good news is that understanding what lenders are looking for
Okay.
can really increase your chances of getting approved.
Oh, so it's not just like random.
No. There are certain things you can do.
Okay, so it's like preparing for a job interview.
Exactly.
You got to know what they're looking for.
You got to put your best foot forward.
Okay, so what are they looking for?
So they're mainly focused on three things.
Okay.
Your creditworthiness,
Okay.
your income stability,
Okay.
and your debt to income ratio.
Okay, three big things.
Three big things, yeah.
So let's break those down a little bit.
Okay, sounds good.
Creditworthiness.
Yes,
That sounds like it's all about the credit score.
pretty much, yeah.
That magical number
The magic number
that follows you around.
everywhere you go.
Yeah.
So that number is basically like a representation of your credit history.
Okay.
It tells lenders how responsible you are with borrowing and repaying money.
So the higher the
The
score,
better.
the more they're going to trust you.
Exactly. The more trustworthy you seem.
Okay.
And they use that to kind of assess, are you going to repay this loan?
Got it. So it's like your financial GPA or something.
Yeah, exactly like your financial report card.
And they look at all kinds of stuff, right?
Yeah, they look at your payment history, like, do you pay your bills on time?
Okay. On-time payments, good.
Very good.
Late payments, bad.
Not so good.
Okay.
How much debt you have?
Okay, so less debt is better?
Less debt is better.
Yeah, got it.
The length of your credit history.
Okay.
So the longer you've had credit, the better.
So if you're young and you haven't had credit for that long, that could be...
It could be a little bit of a disadvantage, but there are things you can do
Okay.
to kind of build that up.
Okay.
And the types of credit you use.
Okay, so like credit cards, loans, all that stuff.
Exactly.
Yeah.
Okay.
So yeah, it's a lot that goes into that score.
A lot of factors.
A lot of factors, yeah.
Okay.
But the good news is that you can improve it
Okay, that's good.
over time.
So if you've made some mistakes in the past, it's not like game over.
No, not at all.
Okay.
It takes a little bit of effort
Okay.
and some time.
But you can raise that score.
So what are some things people can do to improve their credit score?
Well, like I said, paying your bills on time is huge.
Okay.
That's like the biggest factor.
Makes sense.
So set up those automatic payments.
Yeah, automation for the win.
Exactly.
Yeah.
Reducing your debt.
Yeah.
So, if you've got credit card debt,
Yeah.
student loans, try to pay those down as much as possible.
Okay.
And then avoid opening new credit accounts unnecessarily.
Okay, so don't just like sign up for every store credit card.
Exactly. Yeah. Just because they offer you a discount.
Right.
Don't do it.
Okay, so that makes sense.
Yeah.
So even a small improvement can make a difference
Huge difference. Yeah.
in the interest rate you qualify for.
Absolutely.
Okay, so it's worth putting in the effort.
It is definitely worth the effort.
Okay, so that's credit worthiness.
Yes.
Then we have income stability.
Right.
So I'm guessing lenders want to see like a steady paycheck?
Yeah. They want to see that you have a consistent history
Okay,
of employment and income. They want to make sure you can be able to make those mortgage payments.
that makes sense.
So they'll typically ask for, W-2s, pay stubs, tax returns.
Oh, fun paperwork.
Fun paperwork, yeah.
Yeah. So what if you're self-employed or you have like a fluctuating income?
Yeah. That can be a little trickier,
Okay.
but it's definitely not impossible.
Okay.
You might just need to provide some additional documentation,
Okay.
like profit and loss statements or bank statements.
Okay, so just more proof that you have money coming in.
Exactly.
Yeah.
You just got to show them the money.
Got it. So it's all about transparency and being organized.
Yeah, exactly.
Okay.
Just present a clear picture of your financial situation.
Okay, so then the last thing that lenders are looking at is debt to income ratio.
Yes.
What is that?
So that's basically comparison
Okay.
of your monthly debt payments to your gross monthly income.
Okay.
So it's looking at how much of your income is already going towards
Like credit cards?
credit cards.
Yeah.
Student loans,
The car payments.
car payments, all of that. So the lower that ratio, the better.
Okay, so that means you have more wiggle room in your budget
Exactly.
to afford a mortgage payment.
Exactly.
Yeah.
Shows lenders that you're not overextended
Okay.
and you can handle that extra expense.
So if you have a lot of debt, it might be a good idea to like pay some of that down
Yeah, that's always a good idea.
before you even start the mortgage process.
It can improve your debt to income ratio and your credit score.
Oh, double win.
Double win.
Yeah. Okay, cool. So we've covered a lot of ground here.
Yeah, we have.
We've got the different mortgage types,
Yes.
credit scores.
Debt to income ratio.
Anything else in that Riqueza Vidal video that we should know about before we move on?
Well, they also had some really good advice about researching different lenders
Okay.
and comparing their mortgage offerings.
Okay, so it's not just about finding a house, it's about finding the right lender too.
Exactly, because different lenders have different terms and fees
Okay.
and, interest rates.
So it's like shopping around for a car or a TV.
Exactly. You don't just go with the first one you see.
Right.
You want to make sure you're getting the best deal.
So you got to do your research.
Do your research, yeah.
Okay.
Compare interest rates, closing costs, loan terms.
That's a lot
It is a lot.
to keep track of.
Yeah, but luckily,
Luckily.
there are tools to help you,
Oh, okay, good.
like online mortgage calculators.
Oh, that's a good idea.
Yeah,
I've seen those.
you can just plug in different loan amounts,
Okay.
interest rates terms, and see how it affects your monthly payments,
Okay.
total interest paid.
So you can kind of play around with it and see what you can afford.
Exactly.
Yeah.
It's like a little financial crystal ball
I love that.
showing you different scenarios.
Okay. So those are good tools to use.
Yeah, definitely take advantage of those.
All right. So this is great. I feel like we've learned so much already
Me too.
just from this one video.
Yeah, Riqueza Vidal really knows their stuff.
They really do.
Yeah.
All right. So we're going to take a quick break. And when we come back, we'll dive even deeper into the world of home financing with more tips from Riqueza Vidal.
Sounds good.
Stay tuned.
All right.
All right. So we're back and we've talked about the different types of mortgages, how to qualify for one, all that good stuff. But Riqueza Vidal had a lot more to say about, what to do once you actually get that pre-approval.
Yeah, once you've got the green light, it's like, okay, now what?
Now the fun begins.
Right.
You can start house hunting.
Yes, but they really caution against getting ahead of yourself.
Oh, okay.
Just because you're pre-approved for a certain amount
Right.
doesn't mean you should automatically start looking at houses at the very top of that budget.
Yeah, that's a good point. It's easy to get caught up in the excitement, and start picturing yourself in like a mansion
Yeah.
with a pool and a home theater.
Yeah.
But then reality sets in.
Yeah, you got to think about all those other costs.
Yeah, what are those other costs?
Property taxes,
Oh, yeah.
homeowners insurance,
Okay.
maintenance.
Yeah.
Like all that stuff adds up.
Yeah, like when you buy a car and you got to factor in gas and insurance.
It's not just the sticker price.
Right.
You got to think about the whole picture.
Okay.
So yeah, they really encourage viewers to create like a realistic budget
Okay.
that includes not just the mortgage payment, but all those other expenses.
So don't overextend yourself.
Exactly. Know your limits.
Got it.
And then they also had some great advice about things to avoid
Okay.
when you're actually out there looking at houses.
Like red flags to watch out for?
Yeah, red flags.
Okay.
So one thing they cautioned against was getting too focused on cosmetic details.
Oh, yeah.
It's easy to fall in love with a house that has like a beautiful kitchen.
Oh, yeah, like granite countertops, stainless steel appliances,
Exactly.
hardwood floors.
Yeah. But those things can be distracting
Oh, okay.
from the more important stuff,
Like what?
like the structure of the house.
The bones.
The bones, yeah. So things like the roof,
Yeah.
the plumbing, the electrical system, the foundation.
No, if those things are messed up,
Yeah, that's going to cost you
that's a big problem.
way more than just like repainting a room.
Right.
So yeah, they really encourage viewers to look beyond the surface
Okay.
and pay attention to the bones of the house.
So it's like buying a used car.
Exactly.
A shiny paint job doesn't mean it's a good car,
Yeah, you got to look under the hood.
metaphorically speaking.
Metaphorically, yeah.
Okay, good analogy.
And then another thing they emphasized was the importance of not skipping the home inspection.
Oh, yeah, that's a good one.
It might seem like an unnecessary expense,
Right.
but it can save you so much money and heartache.
Yeah, it's like a medical checkup for the house.
Exactly.
Oh,
It's
no.
going to reveal any hidden problems.
That you might not see just walking through.
Yeah, like you're not a professional.
Right.
You don't know what to look for.
Yeah.
So a qualified home inspector will go through the whole property,
Top to bottom.
top to bottom, yeah. And they'll give you a detailed report
Okay.
outlining any issues or areas of concern.
So you know what you're getting into.
Exactly.
And that could help you negotiate the price too, right?
Yeah, absolutely.
If there's a bunch of stuff wrong with the house.
You can use that report to your advantage.
Okay, so it's like having an expert on your side,
Exactly. yeah.
helping you make an informed decision.
Right, because buying a house is a big investment. You don't
Yeah.
want to make a mistake.
No.
Okay.
So we've got the home inspection.
Yeah.
What about real estate agents?
Oh, yeah. They talk about that too.
Okay.
They really stress the importance of working with a reputable and experienced real estate agent,
Okay.
especially for first-time buyers
Yeah.
who might not be familiar with the whole process.
It's a lot.
It is a lot, yeah.
So it's like having a guide
Exactly.
leading you through a jungle.
Yeah, they know where the pitfalls are.
They know where the tigers are.
Yeah. Hopefully not literal tigers,
Right, right.
but yeah, they can help you navigate the whole process.
So they help you find properties?
Yes.
They handle the negotiations?
Yes.
All the paperwork?
All the paperwork.
Okay, so they're like a matchmaker, a negotiator,
A therapist.
a therapist. Yeah,
You're
probably.
going to need one.
All rolled into one.
Exactly.
Okay, so definitely get a good real estate agent.
Yeah, they're worth their weight in gold.
Okay, good advice.
Good advice.
And then comparing mortgage offers.
Oh, yeah, that's a big one.
How do you even begin to do that?
Well, they talk about how it's not just about finding the lowest interest rate.
Okay.
You got to understand the terms and conditions of each loan.
Okay.
Make sure you're choosing one that actually fits your financial situation.
Right, because sometimes a lower interest rate could come with higher fees.
Exactly. Hidden fees,
Yeah.
closing cost, all that stuff.
Yeah.
So they really stress the importance of comparing the annual percentage rate,
APR.
the APR. Yeah.
What's that?
So that factors in not just the interest rate,
Okay.
but all the other fees.
So it's like the true cost of the loan.
The true cost. Yeah.
Ah, okay.
They also recommend paying attention to the loan term.
The loan term. Okay.
So that's the length of time you have to repay the mortgage.
So like 15 years, 30 years.
Exactly. 15, 30 are the most common.
Okay, what's the difference?
So a 15-year mortgage usually has a lower interest rate.
Okay.
So you'll pay less interest overall.
And monthly payments are higher.
Your monthly payments are higher. Yeah.
Okay, so it's like a trade-off.
It is a trade-off.
Lower overall cost, but higher monthly burden.
Exactly.
Go. And then 30-year.
30 years the opposite.
Lower monthly payments?
lower monthly payments,
A higher overall interest.
higher overall interest. Yeah.
Okay.
So it really depends on your situation.
Your budget, your goals,
Exactly. Yeah.
and then prepayment penalties.
Oh, yeah. Those are sneaky.
What are those?
So some lenders will actually charge you a fee
Oh, okay.
if you pay off your mortgage early.
What? That doesn't seem fair.
I know, right?
If you have the money and you want to pay it off.
You would think they'd be happy.
Yeah, exactly.
But some lenders use those penalties to make sure they get their expected interest earnings.
Oh, okay. So it's all about the money.
It's all about the money, yeah.
Okay, so watch out for those prepayment penalties.
Definitely read the fine print.
Okay.
Yeah. So Riqueza Vital really stresses the importance of being an informed consumer.
Makes sense.
Asking questions.
Okay.
Don't be afraid to negotiate.
Advocate for yourself.
Advocate for yourself. Yeah.
Okay.
And they also remind viewers that, making mistakes is part of the learning process.
That's reassuring.
Yeah.
It's okay to mess up.
It's okay to mess up. Just learn from it.
Don't be afraid to ask for help.
Exactly.
You know?
You've got a team of experts.
Okay.
Lean on them.
All right, so we've covered a lot of ground here.
They have.
We've talked about, being realistic with your budget,
Yeah.
watching out for red flags when you're looking at houses,
Yes.
getting a home inspection, working with a good real estate agent,
Crucial.
and then comparing mortgage offers very carefully.
Very carefully, yeah.
Okay.
And we're not done yet.
Oh, there's more.
There's more.
Okay. All right.
All right, we'll be back in a moment to talk about closing costs, government programs, and some final takeaways from Riqueza Vital. So stay tuned.
Okay, so we're back, and I feel like we're nearing the finish line of this home financing marathon.
Yeah, we've covered a lot of ground, but there are a few more gems.
Okay, a few more nuggets of wisdom.
Exactly, that Riqueza Vital shared that we don't want to leave out.
Okay, lay it on me.
All right, so one thing they really emphasized was understanding closing costs.
Closing costs.
Yes.
What are those exactly?
So those are the fees and expenses you pay on top of the down payment when you actually finalize your mortgage.
Oh, okay.
And they can add up.
So it's like you think you've budgeted for everything.
Right.
And then bam,
Hidden fees.
surprise.
Exactly.
Oh, okay.
It's like those baggage fees that airlines hit you with, after you've already booked your flight.
Yeah, you think you got a good deal.
Exactly.
And then suddenly it's like hundreds of dollars more.
It's like, where did this come from?
Exactly.
So yeah, closing costs can include things like loan origination fees, appraisal fees, title, insurance, government recording fees,
Okay.
all sorts of fun stuff.
Okay, so how can we avoid being surprised by these?
Well, luckily,
Luckily.
lenders are required to give you something called a loan estimate
Okay.
within 3 days of receiving your mortgage application.
Okay.
And this document outlines the estimated interest rate, monthly payment, and closing costs for the loan.
Oh, okay. So it's like a preview
Exactly.
of what you're going to have to pay.
Exactly. So you can kind of get a sense of, okay, what am I really looking at here?
Okay, so read that carefully.
Very carefully.
Compare it to other loan offers.
Yes.
Ask questions.
Always ask questions.
Okay.
Don't be shy.
Good advice.
Good advice.
Okay, so is there any way to reduce those closing costs?
Well, they do mention a few things.
Yeah.
You can try negotiating with the seller
Okay.
to cover some of the closing costs, or you can ask your lender about lender credits.
Lender credits, what's that?
So those are basically credits that can offset some of the closing costs.
Oh, okay.
So it's like a little discount.
I like discount.
Everybody likes discounts.
Okay, so it never hurts to ask.
Never hurts to ask.
All right, good to know.
All right, so another important topic they covered
Okay.
was government programs that can help make homeownership more affordable.
Okay. This is good information.
Yeah, especially for first-time buyers.
Okay, so what kind of programs are we talking about?
So one example is the FHA loan program,
Okay.
which is insured by the Federal Housing Administration.
Okay.
And these loans typically have lower down payment requirements
Okay, that's good.
and more flexible credit score guidelines.
So if you don't have perfect credit,
Exactly.
this could be a good option.
It could be a good option.
Okay.
There's also the USDA loan program.
USDA.
Yes.
Okay.
And this is designed for rural borrowers.
Okay.
And these loans offer low interest rates, and they can even provide 100% financing.
Wait, 100% financing. So
Yeah.
that means no down payment.
No down payment required.
Wow. Okay, that's a game changer.
It can be, yeah, for a lot of people.
I agree.
And there are other programs out there too, like VA loans for veterans,
Okay.
state-specific programs for first-time homebuyers.
So do your research.
Do your research. Yeah. There might be something out there
That can help you.
that can help you. Yeah,
Okay, so definitely explore all those options.
absolutely.
All right, so Riqueza Vital had so much good information in this video.
They really did.
It's like a crash course in home financing.
Yeah.
So as we wrap up this deep dive,
Yes.
what are the key takeaways that we should remember?
Well, I think the biggest takeaway is that knowledge is power when it comes to buying a home.
Makes sense?
The more you know, the more confident you'll be and the better decisions you'll make.
Yeah, so do your research, ask questions, don't be afraid to reach out to experts.
Exactly. And also, be patient. This is a big decision.
Yeah.
Don't rush into it.
Take your time.
Take your time. Find the right home for you.
Right.
And remember that home ownership is a journey.
Oh, I like that.
It's not just a destination.
There are going to be challenges along the way.
There will be.
But if you plan carefully,
Yes.
make informed decisions,
And stay positive.
you'll get there.
You will.
Okay.
So happy house hunting, everyone.
Yes, good luck out there.
Good luck.